Even though winter isn't here yet, the housing market is already cooling down, but not in a good way. The prices of homes are declining, and loan interest rates are through the roof. According to Redfin, a real estate brokerage, over 61% of sellers have already cut their asking prices. And if you're planning to take out a 30-year mortgage, watch out. Freddie Mac, the mortgage giant, has reported that the national average mortgage rate has gone up for the 5th week in a row, and it's now a whopping 7.57% as of the 2nd week of October. It's not a big shocker to find out that year over year, existing home sales have been on the decline for 3 consecutive months. In fact, it has dropped by 0.7%, and that's not just in one region. It's all over the U.S. The National Association of Realtors has reported that all major regions are posting declines in home sales. Sellers are struggling to find buyers, so the prices have recently been dropping by thousands of dollars. According to the real estate website Zillow, even cities like San Francisco in California have seen a dip of 3.2% or more during the summer. It's a tough market out there for sure, and home prices are always fluctuating. But is this just a temporary dip or a good time for buyers to be on the lookout for deals and for sellers to be patient and wait for the market to pick up again? Let's discover. But before I reveal the 10 cities seeing big house price cuts, please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe is fuel for the algorithm that helps support this channel. Thank you. Now, back to the video. Number 1. Denver, Colorado. Denver, Colorado recently experienced a drop in housing prices with a decrease of 1.4%. This is also reflective of a longer-term trend as there has been a negative 17% decline in prices over the past year. Comparing it to data gathered by Zillow, this housing crisis is even more severe than the one in 2008. Looking back to the end of 2007, housing prices in Denver were at 1.3%, but today they've jumped to a staggering 1.4%, and things aren't looking up for the market. In fact, it appears that prices may continue to tumble further due to various economic factors. The housing crash is just getting started, and what we've seen so far is only the tip of the iceberg. Based on current trends, the housing market will continue to struggle because of the looming recession and higher interest rates launched by the Federal Reserve. Number 2. Portland. If you're considering buying a house in Portland, you might want to hold off for now. In the month of June, the value of houses in Portland experienced the 9th biggest drop in the country. The bad news doesn't end there. House prices went down 1.6% this month alone, and things are looking bleak with an annualized pace of negative 20%. Number 3. San Francisco, California. California's real estate market has taken a hit lately. In August alone, San Francisco housing values have decreased by 1.8%. This is a pretty big deal as it has the potential to turn into a negative 22% over the course of a year if the decline continues. Unfortunately, the pandemic has also caused a lot of people to move out of California. In fact, around 7% of the population has left since that started. It's a bummer, but it's understandable given the circumstances. On top of that, California's tech industry has also taken a big hit. Interest rates have been high and demand has been decreasing, which means that the market for tech businesses in the state has dropped as well. All of these factors combined put the California housing market in a precarious position. It's very possible that there could be a significant crash if things don't improve. Number 4. Los Angeles, California. The real estate market in Los Angeles saw a notable 2.2% decline in activity, potentially leading to an annualized decrease of over 25%, posing a significant setback for the industry. This reduction ranks as the 7th largest decline among all states in the U.S., underscoring the severity of the situation. This decline could have several reasons. One reason could be that the cost of living in Los Angeles continues to be high, making it challenging for people to purchase homes. Additionally, the pandemic-induced economic slowdown may have dampened interest in real estate investments, leaving fewer buyers on the market. The potential decline in the real estate market doesn't just impact the industry. Its impact can ripple out to adjacent industries, affecting construction, mortgage and insurance companies, and more. Moreover, homeowners could be at risk of losing equity if the market continues to contract. However, a low housing inventory could offset the dip in the market, as it would continue to keep prices high. Number 5. San Diego, California. San Diego, California went through a notable drop in the real estate industry. It's a similar story for Los Angeles and San Diego. Both cities experienced a decline in the housing market over the month of September. If this trend continues consistently for a year, the housing market in California will have fallen at a negative rate of 25%. Despite this decline, real estate experts forecast that the situation could become worse as many Californians do not earn enough to cover their mortgages. This is particularly problematic in the housing market where interest rates are high. As a result, numerous prospective buyers are refraining from purchasing homes, exacerbating the situation. This leads to a decrease in home prices, and if this pattern persists, property values in California will continue to decline over time. Unfortunately, this situation is not good for anyone invested in real estate in California. It points to a future when California's real estate industry could experience an even more significant downward crash. Number 6. Provo, Utah. Home values in the city dropped a whopping 2.5% in 2023. Experts predict that the decline will continue and that over the next year, the value of homes in Provo could drop by as much as 30%. Despite this trend, the city still has a large inventory of expensive houses. As a result, demand for these properties is dwindling. Prospective homebuyers are finding it difficult to afford these houses amidst high interest rates and mortgages. Number 7. Boulder, Colorado. Boulder, Colorado just went through a rough patch in the real estate market. Prices dropped by a whopping 3%, making it the fourth largest drop in the city's history. The worst part? The trend is showing no signs of slowing down. It could even hit an annual decline of 36%. If you're not familiar with real estate, let me give you some context. A decline of that magnitude is basically unheard of, and it's pretty scary. Think about it. Imagine if every year your house lost more than a third of its value. This downturn isn't just bad, it's record-breaking. According to Zillow, Boulder's 3% decline is the biggest drop the city has ever seen. And we're not just talking about recent history either. This beats every housing bubble that America has experienced throughout history. Number 8. Salt Lake City. Salt Lake City just experienced a pretty substantial drop in home values, with prices going down by about 3.4%. That's quite a bit. What's even more concerning is that this isn't an isolated incident. The West Coast as a whole has been seeing some major crashes in the housing industry lately, with the biggest and fastest ones happening right along the coast. Experts are predicting that if this trend continues, we could see prices dropping even further and more rapidly over the coming months. It's a concerning trend that definitely bears watching. Overall, the housing industry across the country is down by about 41% on an annualized basis. That's a pretty significant drop. Number 9. Austin, Texas. Apparently, the housing industry has been hit hard in Austin, Texas, and not just once, but twice in the last month. The value of houses has plummeted by 3.5%, and if this trend continues, we're looking at an annualized pace of negative 42. What's worse is that this downward spiral may not be over yet. We're just experiencing the first wave of recession, and combined with the increase in interest rates by the Federal Reserve back in November of 2008, the decline was only at 1.7%, but now it's a whopping 3.5%. So, what does this mean for homeowners and prospective buyers? Well, brace for impact, folks. If the decline continues, we could be looking at even deeper falls in the housing market. It's a pretty grim situation. The combination of the recession and the Federal Reserve's interest rate hike seems to be the main culprit. Number 10. San Jose, California. Housing prices have dropped by 4.3% in San Jose, with a possibility of an annualized pace of over 50% if this downward trend persists. These findings are part of a broader pattern that we're seeing in California, which has been hit particularly hard by a housing crash catastrophe. Even though California has suffered the most significant housing crash in recent history, with declines as high as 4.3%, there are still some cities that have avoided being affected at all. According to data from Zillow, some cities have not been affected by the crash. Analysts say that many people have been priced out of the market because of increased home costs, higher interest rates, and stricter lending rules. Moreover, people are not always willing to move to more affordable areas, which can add to some of the challenges. Although we can't predict how much of a decline these unaffected areas will experience, it's safe to say that we're headed towards a prolonged housing crash that will impact every state in the U.S. Overall, while it's undoubtedly not the best news to hear that there's a housing crisis in America, it's essential to understand that not all hope is lost. There are measures that people can take to ensure that they are protected, such as being vigilant with spending, improving credit scores, and keeping an eye out for any new policies that may emerge. Thanks for watching, and please make sure you subscribe if you enjoyed the video, and be sure to leave a comment below letting me know what trends you are seeing in your local market.